Welcome back. Well, let's talk about a couple of financials. Spandana Spurti Financial reported what was a weak set of Q3 numbers. The company witnessed a sharp decline in net interest margins this quarter and asset quality worsened as well. To discuss this and more, we have Shalabh Saxena, who's the MD of the company, joining in now. Welcome to the show, Shalabh. Just wanted to start with the key point, which is basically the net interest margins. It came in at around 13.3% versus 14.1% on a sequential basis. So there's been quite a drop that we've seen in terms of the net interest margins. What led to that, and what can you guide us on in terms of what we can expect when it comes to NIMs, as well as maybe a range?
Sure. Good afternoon, and thanks for asking that question. Very critical. The 84 bips, let me just split the 14.1 and 13.3. I'll split it into two. We had undertaken a monthly to a weekly conversion in the business model. And I've been making this point across, whenever I've been speaking to everyone. About 7 quarters back, when the new management took over the company, the company was essentially a monthly repayment company, in the sense the customers were paying once a month. Microfinance, in essence, is a small ticket loan, and hence liabilities, if they are small, there's a good chance that it will tide you through the times when they are not good. So we started with this journey on transforming the company from a monthly repayment company to a weekly repayment company. So the flows that you see, coming back to your question, the 84 bips, about 38 bips comes out of the SMA flows, because what happened was we implemented this project across 730 branches. About 1.6 million or about 16 lakh customers were impacted. So obviously it was a substantial chunk, about 50%, 52% of our book was impacted because of this. We are cognizant of the fact that this was temporary inconvenience, but this was required for us to change the model, and hence we had to take that call, and that is why we went ahead. So that is the 38 out of the 84 bips that we are talking about. The 46 bips, which is the balance, is a factor of the leverage. Look, as a company, if you go back and if you look at our financials, exactly a year back, which is Q3 of last year, our leverage was 1.7. We are at 2.3 now. So as this leverage keeps on increasing, and we've been saying this, that we are comfortable with the leverage of under 4, which is the debt to the equity. So we are comfortable with that number. As the leverage increases, you will see a contraction in NIMs. Having said which, from a business point of view, I think the numbers are pretty much in line with what we've been saying, be it customer acquisition, be it the AUM growth, or be it the disbursements. So we are in line. The SMA flows, which we saw, will probably continue for another 2 to 3 months max, and post which then I think we should see a BAU scenario.
All right. So before we talk about the way ahead in terms of growth for your company, AUM, disbursals and NIMs, I just wanted your thoughts on the capital consumption. I'm looking at your CRAR. Same time last year it was 39.13%. Now it's 35%. Last quarter it was 36.6%. What caused you to consume so much capital without a resultant increase that we're seeing in your assets as well? Did you have to write off some loans or something?
No, so look, from 39 to a 35, and so the immediate answer to your question is no. There's a standard write-offs that we have done. There's nothing. There have been flows equivalent to a 56 crores. That's the 1.61% GNPA that I'm talking about. So there is nothing unusual about this whole thing. Specifically on the question of capital, let me also detail this. We, until FY25, which is the next year, we are absolutely, it's a pretty strong balance sheet. The regulatory requirement is 15%. We are at 35%. We have no requirement until the end of next year on capital.
Okay. All right. Now, just coming to your asset quality, your gross NPA spiked up around 22%. What led to this worsening? Which are the segments where you saw the maximum amount of asset quality worsening?
Yeah, so as I explained just a few minutes back, this is a change in the distribution model that we are doing. As a result of which we have seen the flows, There is nothing wrong in the quality of customers that have been sourced, and we will go back to the customers and get the money. So, so that part, purely from a quality point of view, the customers are fine, the customers are intact. It is just the sheer size of the transformation which has kind of led to the slips, which we'll kind of cover up in the next 2 to 3 months.
All right. So then just based on that, since you're saying that, this is a one-off quarter because of the change which has taken place in terms of, I think, the collection timeline, can you then give us a sense in terms of what investors can expect next quarter? Are you expecting this kind of a disruption to probably take place next quarter, which is in Q4 going into Q1? Are you expecting a stability? Give us at least a range when it comes to the net interest margins as well as the gross NPA on a percentage basis also.
Okay, so one by one. The disruption that we spoke about, we undertook this project in July and August of last year. And given the sheer size, as I said, it's going to take another 2 to 3 months. So it could probably, it would be an absolute BAU for us probably in the first month or a month and a half of the next quarter. So that's your first question, that you asked. The second question is on the guidance on NIM. We've been maintaining 2-3. So we've been saying that NIM of anything above 13.5 is what we are comfortable with, and that is what it will be. That's number one. Number two, on the ROAs, we've been saying that, a 4.5 and above is what we are comfortable with. We have a 5.5 in the results, so that part is pretty well taken care of. On the credit quality side, we've been saying that the portfolio quality or the credit loss at a balance sheet level on a sustainable basis will be under 2%. I think, that is where we will be, comfortable.
All right. Just before we let you go, Shalabh, quickly, you said there were standard write-offs done on an absolute amount. How much was that?
56 crores were the flows into the GNPA, and that's the reason why you see the SMAs. Apart from that, there have been slips from a standard to a SMA 0, SMA 1, which we will kind of recover. So these are the customers who are in the transition phase who will kind of pull back.
Okay, all right, Mr. Saxena, we are going to wrap up on that note, but thank you very much for joining in and giving us that clarification. So hopefully maybe in the next couple of quarters, we will see some amount of stabilization in terms of at least the net interest margins as well as the asset qualities. This quarter, the company has indicated was probably an aberration. Well, we need to take a break, but let's do